The Bitcoin market, it's just so noisy, right? You've got predictions, you've got opinions, endless charts, but what if you could just cut through all of that? What if you could read the story behind every single decision ever made on the network? Well, today, that's exactly what we're going to do. We're diving into the battle between two mindsets seen through the crystal clear lens of on-chain data.
And this quote from on-chain analyst James Chek really gets to the heart of it. It's not just about the numbers. It's about decoding human behavior. All of it. The fear, the greed, the euphoria, the panic. It's all permanently etched right there onto Bitcoin's public ledger. And on-chain analysis, well, that's the tool that lets us translate all that raw emotion into actual market intelligence.
So, how does this actually work? Well, think of every single transaction on the Bitcoin network like it's a digital fingerprint. It tells a story. It tells you when someone bought their coins, exactly how long they held on, and the profit or loss they finally took when they sold. It's a completely transparent history of market psychology, and it's open for anyone to see.
So, to put a more formal definition on it, on-chain analysis is literally the study of the blockchain itself. It's all about watching the capital flow in and out and really getting a feel for the collective sentiment of every single investor. Like Chek says, it's kind of like having X-ray vision, something you just can't get in traditional markets.
Okay, so we get the what, but what about the how? How do we actually do this? Let's open up the Analyst Toolkit. There are a few key metrics that turn all of this raw data into insights you can actually use. Metrics that let us measure the market's heartbeat.
First up, you've got the realized cap. Now, this isn't like the market cap you always hear about. Instead of just multiplying the current price by the coin's supply, this metric is way smarter. It values each Bitcoin at the price it was last moved. This gives us the true aggregate cost basis of the network, the total sum of real capital invested. And right now, that number is over $1 trillion of actual skin in the game.
Next up, we've got the MVRV ratio. And this one is all about measuring the market's incentive. It compares the current market value to that realized value we just talked about. And what that tells us is the average unrealized profit or loss. Are investors sitting on huge gains, just itching to sell? Or are they deep underwater, forced to hold on for dear life? MVRV gives us that answer. And finally, there's SOPR. This one shows us the result. So if MVRV shows us the incentive to sell, SOPR confirms whether people are actually doing it. It measures the average profit or loss on every single coin being spent on a given day. When SOPR spikes, you know a ton of profit-taking is happening, a classic signal for a market top.
All right, now that we have our toolkit, let's put on our first hat. Let's think like Chek the analyst, the cool, objective, data-driven scientist. And from this angle, let me tell you, the data is flashing some pretty serious warning signs that this bull market might be running out of steam. And the central question the analyst is asking is this: are the seasoned investors, the long-term holders, the OGs, are they starting to cash out? Because the data is showing a tremendous amount of selling pressure. I mean, it's almost overwhelming, and it's coming from the very coins that haven't moved in months or even years. And we are not talking about small moves here. On some days, long-term holders have been offloading billions of dollars worth of Bitcoin. That volume of selling can easily soak up all the new demand coming from things like the ETFs and still have enough power to push the price down. It's a massive, massive headwind for the market.
And all of this brings the analyst to one crucial price level, their line in the sand, $95,000. So, why that number specifically? Because based on a key on-chain metric called the realized price, if Bitcoin drops below 95K, over 62% of all the capital ever invested in Bitcoin would be at a loss. That's a huge psychological tipping point that could absolutely trigger a real bear market.
But hold on. That is just one interpretation of the data. Let's switch personas. Let's take off the analyst hat and put on another one. Check the HODLer, the long-term believer, the optimist. And from this point of view, the story looks completely different.
This right here is the core conflict. Where the analyst sees massive selling pressure and risk, the HODLer sees massive absorption and incredible strength. What one calls fading momentum, the other calls a resilient market building a strong foundation. You see? It's the exact same data, but a radically different interpretation.
The HODLer's core argument is beautifully simple. For every $1 billion of Bitcoin that gets sold, $1 billion has to be bought. Think about it. Despite this historic wave of selling, the price has only pulled back pretty modestly.
And that suggests that some enormous, very quiet entities are stepping in, creating a powerful buy wall and just absorbing every single coin the sellers can possibly throw at them.
And this quote just perfectly captures that defiant HODLer optimism. You know, the funniest and maybe the most Bitcoin thing that could happen would be for the market to completely punish all the cautious sellers. A sudden, explosive rally to new all-time highs from here would catch everyone off guard and trigger a massive wave of FOMO.
So, here we are. We have two compelling yet totally competing narratives. We have the cautious analyst and the optimistic HODLer. This brings us to the key battlegrounds, the specific price levels that will ultimately tell us which one of these stories is going to win out.
Let's start with the bears again. As the analyst warned, a sustained move below $95,000 is that line in the sand. If that level breaks and holds, it's a really strong signal that the sellers have won, putting 62% of the entire network at a loss and proving the analyst's cautious view was the right one.
And that puts us right here, right now, squarely in the middle of this critical battleground, roughly between $95,000 and $118,000. This is where the war is being fought in real time. It's the long-term selling pressure versus that new buyer absorption.
And on the flip side, a convincing break above $118,000, that would be the bull's victory flag. Clearing that level would suggest the buyers have completely overwhelmed the sellers, breaking through key resistance and opening the door for a powerful move into price discovery. This is that funniest outcome the HODLer is watching for.
So there you have it, two sides of the exact same on-chain story. You have the analyst, who sees the risk in the billions being sold, and you have the HODLer, who sees the opportunity in the billions being absorbed. The on-chain data gives us the script, but the market, well, the market hasn't decided on the ending yet. The only question left is, which story will it choose to write?